buddy, put that thing back in its holster. We haven't gone anywhere.
I don't understand.
Check out the MichaelDukesShow.com for information on how to get access to the podcast.
Welcome to the party, pal.
The Michael Dukes Show.
The greed and the entitlement is astounding to me.
What more could you want from a low-budget radio program?
This is a dumpster fire.
That was just BS.
It is time to get a new perspective.
We know just what you need, and we've got just the cure. Open wide and prepare for a steaming hot cup of freedom.
I just don't fathom it.
The Michael Dukes Show, streaming live across the world.
Oh, happy Tuesday to you, my friends. Welcome to it. Another beautiful day as the big glowing ball of plasma, hunkers up over the top of the hillside there. It's going to be another beautiful day down here on top of the world in Homer, Alaska. It is the Michael Dukes Show, broadcasting live across the state on this, your favorite radio station and or FM translator, and live around the world on the internet at michaeldukeshow.com, where you'll find the audio-only live stream, plus links to our simulcast on Facebook, YouTube, and Rumble. It is a beautiful Tuesday morning, and Tuesdays, those are the days that we dive down into the deep end of the cesspool. Of the pool. It is the weekly top three. Brad Keithley, Alaskans for Sustainable Budgets, comes in and joins us with three big topics. Usually it's just loaded with truth, and the truth will set you free, but it's also painful. And today, man, he is bringing the pain today. We got some interesting topics we're going to dive into. In hour two, I'll do some recap. Plus, we got Chris Story coming in to put some salve on our burns that we're going to get from Brad. It's going to be fun. I don't know. I'm kind of wondering, is Brad is he just a masochist, or how does that work around here? Alaskans. I gotta wonder sometimes, Brad. I read these the three, and I go, ooh, I gotta go look up burn units in the United States to make sure that I'm okay. It's gonna be a tough one. Brad Keithley, Alaskans for Sustainable Budgets, joins us. Hello, my friend. How are you?
That's what happened, Michael. That's what happens, Michael, when you live inside spreadsheets. You don't really you lose perspective. You just see numbers and you just go down the track.
Exactly. You're still processing the truth. It's just you're so inured to it. You're just like, yep, here's some more. Have another plate of pain. It's gonna be fine. It's gonna be good. But it's good to at least be realistic and practical. And I think that's what that's one of the things that Brad brings to this discussion. And it's going to be interesting. So, Brad, let's start off with the weekly topics this week. We've been hearing a lot about drill, baby, drill. We've been hearing a lot about the president and his executive orders opening up the state and how we're saved. It's all going to be great. Don't worry about it. And yet maybe not as great as we thought it was. There's a downside to drill, baby, drill. Give it to us.
Well, Michael, this one, this segment is triggered by an article in a good article by Alex DeMarvin in the ADN. The headline of which ConocoPhillips says it plans significant oil exploration this winter in National Petroleum Reserve, Alaska. And that follows a Bloomberg article to the same effect, and really details some plans that Conoco has filed for or is in the process of filing for with the Trump administration to do some significant exploration work in MPRA on leases that it already owns, but was not permitted by the Biden administration to develop, to go after, to explore on. But that it holds and is proposing to the Trump administration that it follow through and do some exploration on those leases. And one assumes, given all of the statements that the Trump administration has made, that approvals will be forthcoming and Conoco will be out there doing some exploration drilling. And the usual reaction and including from me initially, to these things is, yay, more exploration, more development, more oil, all good things. But there's a downside to this. And this segment is really for any legislators who are listening to it now or listen to it later on the podcast, or their staff who listen to it now or listen to it later on the podcast. There's a bite that comes out of this. It's going to come to bite you, the legislators, in coming sessions. And let's go to this chart that we've used before, Michael, if you have it handy. Michael?
I let me pull it up. I'm sorry. I was you keep talking and I'll do my job. That's one of the things.
Let's go to this chart that we've used before with respect to the impact on oil taxes, oil revenues, rather, from development drilling. And there's several things that go on. Yes, out in the future when oil's produced, ultimately they do produce the drilling and the additional oil does produce additional revenues. But in the meantime lasts for a long time. In the meantime, there's a significant hit. This is a chart we've used before. It shows on top the projections of production volumes over the next decade, according to the spring revenue forecast, the most recent revenue forecast from the Department of Revenue. The blue line on top is total production. The red line is production from state lands. And then on the bottom, the dashed lines are the revenues projected from oil production over the next decade, also from the spring revenue forecast. The dashed red line are royalties, that is royalty revenues from state lands. The dashed blue line is production taxes. And production taxes have historically been a significant segment of revenues. But you can see over the next decade, according to the spring revenue forecast, that production taxes are on a significant decline that continues until 2032. And then when they jump back up, they don't jump back up to the levels that we had. They jump up to less than 50% of the levels that we had in 2024. And the levels in 2024, if you went back 10 years, those levels in 2024 are even higher yet over the last decade. So there's three things that are driving the reduction in production taxes, which is significantly hitting the revenue side of the budget. One is the per barrel credits that everybody talks about and complains about, but the per barrel credits really only kick in when you have production, and they're not that significant. They trigger off of what your tax obligation is, so they're not that significant if your tax obligation's down. There's two things that are driving the tax obligation down before the per barrel credits come in. One is gross value reduction. So the way that SB 21 set up the tax structure, it incentivized new oil from areas that hadn't been producing before, incentivized new oils by reducing the tax value applicable to those volumes. In a sense, it gives new oil a credit and subjects it to a lower tax take than old oil. So as you see new oil replacing old oil, the tax is going down, tax revenue is going down because the per barrel revenue from that new oil is lower than the per barrel revenue from the old oil. And that's due to the gross value reduction, the GVR. The third thing, and this is the thing that I want to emphasize with respect to this new drilling that Conoco is announcing, or the new drilling that anybody announces. The third thing is costs. In the calculation, we have a net profits tax in the state of Alaska. So in the calculation of the revenue subject to tax, or your income subject to tax, the producers get to deduct expenses, both operating expenses and capital expenses. Unlike in the normal world, the normal tax world, where capital expenditures are amortized over a period of time, 3 years, 4 years, 5 years, whatever. Under the oil tax code, capital expenditures are completely deductible in the year in which they occur. So you get 100% tax credit for capital expenditures. So when this chart, the reduction in the dashed blue line over time, what you're seeing is the impact of the capital expenditures significantly, an impact of the capital expenditures that are being spent to develop the additional oil that you see coming on toward the end of the 10-year period. The more capital that's spent, the bigger the deduction, the lower the revenue that the state gets out of oil. And so when we about, oh, great, there's going to be new expenditures, that's good for a lot of purposes. But what it's going to do to this chart is drive the production tax revenue even lower. And to the extent that drilling continues beyond the end of the period, it will continue to drive the production tax revenues lower because the producers are able to deduct that capital expense on an annual basis. Even if so, one question out here is PICA. What's PICA doing to this? PICA isn't doing anything to this chart until it starts up, because Oil Search is not paying, their Santos now is not paying any oil taxes. It doesn't have any significant production. I don't think it has any production, but it doesn't have any significant production through the first part of the period. It's drilling up the PICA field. Once PICA starts, then what Oil Search is able to do, or Santos is able to do, is to take all that accumulated capital expenditures that they've made, all those accumulated expenses that they've incurred, and start using them as credits against future production, or as deductions against future productions. So even once the field starts up, we won't get significant production tax revenues, because they will have these accumulated deductions that they're able to use to offset revenues, oil revenues into a significant period in the future. So the downside of this, and what state legislators and those who are concerned about budget issues need to focus on, or need to understand, is when you see an announcement about increased exploration, increased spending, increased development, good in the long term. Once we finally get out of the period where they're spending a lot, good in the long term. But in the short term, and by short term, this really, we really mean 10 years. In the short term, it makes our state budget issue even worse by continuing to push down on production tax take by the state. So keep in mind when you see these headlines, great, drill baby drill, isn't that wonderful, and all that sort of stuff. But also keep in mind that the boomerang on this is in the foreseeable future, we're going to continue to have low production tax revenues, which is a major component of oil revenues, is going to continue to drive those revenues down. So it means continued budget problems for an extended period as we continue to have producers out there, particularly current producers like Conoco, producers out there drilling and spending money on new projects.
So the too long don't read on this whole thing, including the chart, is what we have more production coming, but lesser revenue. And that is driven specifically by the way that the taxes are currently structured, because they can, not only is it net profit, but they can amortize it immediately instead of taking it out and depreciating it over a period of time. And that is the major concern here, is that if we had a different tax structure, we could be having a larger take as the owners in the short and the long term. Is that correct?
Yes. What we've designed is a tax structure that pushes Alaska's take, at least from oil taxes, pushes Alaska's take out into the future. It allows essentially the producers to recover their costs up front out of deductions from production taxes, and pushes Alaska's take out into the future. And when you have a period where we have prolonged intense drilling, like we're going through now, and you're accumulating a lot of costs. When we have a period like that, we're pushing Alaska's take way out into the future. So nice for legislators maybe in the 2040s and 2050s, not so good for legislators in the 2030s and early 2040s.
Brad Keithley, Alaskans for Sustainable Budgets. The weekly top 3 continues. We got more coming up. Up next, it's number 2, and we will continue the Michael Duke Show. Liberty Base. Sorry. We're going to be back with more in just a moment. Don't go anywhere. Back with more after this.
If you missed the show, you can listen to it on your time with Dukes On Demand. Oh, and it's free. Like America used to be. Streaming live every weekday morning on Facebook Live and MichaelDukesShow.com.
All right. Hold on a second, Brad. There's a question here. It says Frank is asking how many barrels of oil is the chart based on? I'll be right back.
So assuming I'm still on, the barrels are in the blue line. The total barrels, Frank, are in the blue line at the top, and they reach 663,000 barrels a day by 2034. There's because we get state royalty on state barrels, but we don't get royalty on federal barrels. The chart's divided into total volumes and then state volumes. And the state volumes that's projected by 2034 is 522,000 barrels a day.
Rick said the volume is down to 353,000. I didn't think they were going to run that low, but as you're showing, as you just said, that number is going to go up.
Oh, the daily volume's down because we're in turnaround on the slope. In the summer, they do turnaround. They do maintenance, what's called turnaround. They do maintenance on the slope, maintenance on wells, maintenance on facilities, annual maintenance on the facilities. And so the summer volumes are down, but the winter volumes have been up. We were at 460, 470, I think, this past winter, and they're projected to, total average volumes are projected to continue to go up. The wax volume is, if you run a sustained 300 plus or minus, I think that was a projection at one point, a sustained number through that. But blips like we're going through currently with the turnaround doesn't really result in wax buildup.
Chris says the problem, in part, in his mind, is the price of oil for the state. But that has more to do again with the taxation and the way the taxes are structured than anything else. Am I right?
Yeah, I've got another column that adjusts for price and does a calculation based on percent of gross revenue, how much of the take is, how much the state take is on a percent of gross revenue. And in the 2020s, or in the 20-teens rather, we looked a lot like before ACEs. We had really gone back to a tax structure that took, as a percent of gross revenues, took about the same share as we did before ACEs. Now we've gone into a tax structure in the 2020s with all of this with all of the expensing going on. We've gone into a tax structure that's significantly lower, not only than ACEs, but lower than where we were before ACEs. We have as a percent of revenue, we have a percent of gross revenues, we have a decline going on as a result, largely what's going on with production taxes. So you can calculate, you can make it neutral as to whatever the price is by using percent of gross revenues. What the state's take is a percent of gross revenues. And when you do it that way, it's also showing the same thing as this chart, that we're having a dive in state revenues.
Sorry about that. My silence alarm keeps going off on the other outside the studio. So it's the alarm that tells me the station's off the air, which it's not. So I'm just throwing it out there and letting folks know. Okay. I think that was all the questions. Except for Chris says, can we postpone this lesson until the participants have had more coffee? There's a lot. I told you today is a deep one. Today there's a lot of good stuff.
That's what the podcast is for, Michael. I mean, that's what
exactly. You could just go. You could do like Chris did earlier. What did Chris say earlier? Going to pass on Brad today. See you tomorrow. He was scared. He was like, "Nope, I'm out. I'm out. Too early in the morning for that stuff." All right. I think we're all caught up on all the questions in the chat room. Good morning, Donna. I guess Donna was in the chat room. I don't know why I don't see some of these people pop in sometimes. But we're getting ready to get back into it. Number 2 of the weekly top 3 is about to jump in and join us. The Michael Duke Show, common sense, liberty-based, free-thinking radio. Please like, share, subscribe, ring the bell, do all that stuff to get more folks involved. We're kind of at a stagnant point. I'd like to see more folks tune into the chat room every day just to get everything going. So if you can share it, I know you probably have, but if you can share it again, that would be great. All right, here we go. Let's get to it.
Public enema number 1. Oh, wait, sorry. Enemy. Public enemy number 1, which makes more sense. On the other hand, he's a little bit of a pain in the Michael Duke Show.
Yep, we're continuing now. Brad Keithley, Alaskans for Sustainable Budgets in the weekly top 3. We're moving on to number 2 as life continues to be interesting for us here. Brad says, yes, the economy is broken. And no, AKLNG won't fix it. This is based on a headline from a Seth Church opinion piece in the ADN. Now, I've known Seth for a long time, and he's very optimistic most of the time. Alaska's financial foundation is broken. He says the gas pipeline might fix it. And you're like, yes, it is broken, and no, it won't. You are such a downer, Brad. What the heck? Give us the thing here.
Exactly. I'm such a whatever the heck it is you said.
Downer. You're such a downer, dude.
So Seth's article is broken into 2 parts. Or Seth's op-ed is broken into 2 parts, and the first half of it is a recitation of all the problems with Alaska's financial foundation, and by that he means the budget's revenue foundation, the revenue foundation underlying the state budget. And he does a good job of really laying out all of the problems with where we are. He doesn't include the segment we just, or the issue from the segment we just discussed, which is that increased drilling comes back to bite the state budget in the near term. He doesn't even include that one, but does a pretty good recitation. And then he flips over about halfway through and talks about the solution that the solution to that might be the gas pipeline. And, it takes a lot of optimism to think that the gas pipeline is going to be a significant contributor to Alaska's revenue side. When you look at the economics of the gas pipeline anymore, it's all predicated on a gas price of the price for gas into the pipeline of $1 an MCF. This is against world prices of, currently Henry Hub's around $4, and other prices in other locations are different, but none of them are down to $1. And it assumes the economics, the marginal economics of the gas pipeline, the best economics they put out there that makes it sort of look halfway economic, if you can fill the pipeline all the way up, is based on a gas price of $1. And there's just not much revenue in $1. There's a lot of MCFs, but there's not much revenue in $1 to be shared between the producers and the state and the localities. Because remember, the production on the slope is also subject to local property taxes, and production and the pipeline would be subject to property taxes. There's just not a whole lot of revenue in there, in that dollar to share. And so when you talk about the gas pipeline being a big revenue producer, it's just not. It's just not going to be a big revenue producer. Some of the economics at various points show a big revenue, a higher revenue number from the state investing in the pipeline, and show revenue in terms of return on that investment. That is, the tariffs that are charged coming back to the revenue coming to the pipeline, and then as an owner, the state getting a share of that, a share of the profits from the pipeline. But when you look at that on the basis of opportunity cost, which is what could Alaska get from investing that money in other ways other than in the pipeline, when you look at it on the basis of an opportunity cost, that investing in the pipeline actually costs the state money, because the state could get more money, could get a higher return on investment if it invested the money elsewhere through the permanent fund or otherwise. So actually, one of the great claims about a revenue driver that the pipeline's made in the past is misleading, because it claims revenue when in fact it's not. There's an opportunity cost to the state from participating in it. The big impact from the pipeline that most people talk about when they talk about its economic justification is from the jobs not only in the construction of the pipeline, but also the jobs in the operation of the pipeline once the pipeline's underway. But under the current tax structure in Alaska, jobs don't produce revenue to the state. We have no way of reclaiming revenue, a portion of the revenue that's spent on jobs. We have no way of reclaiming that to the state. We don't have an income tax. We don't have a sales tax. So there's no revenue to the state from all those jobs. Yes, it creates economic health in the private sector, but it doesn't create economic health to the state, because none of that comes back to benefit the state. The other thing about claiming that there's a financial benefit to the pipeline, state revenue benefit to the pipeline, is property taxes. Some people say, oh, well, the state will at least get a portion of the value of the pipeline in terms of property taxes, just like it does off of taps. But when you dive into the economics of AGDC and look at what they've proposed, they propose a special tax on the gas pipeline to make it economic, to make the sales price economic. They proposed a special tax on the pipeline that's just a fraction of the property tax that we get on the oil pipeline. So that's not a big revenue producer for the state either. In short, I mean, Seth's got it right in terms of, yes, the state faces a financial difficulty, but the gas pipeline is just not going to be a solution. That's not going to be where we're ultimately going to generate revenues to the state.
As much as I admire this, the whole problem is that the whole premise is based on the fact that the pipeline is going to get built. Now, again, we could go back to the Wood-Mackenzie report, which had some of the rosiest outlook on it, and with a correct me if I'm wrong, but I believe it was with an 80% subsidy, they were still delivering gas at like $3 over market value, with an 80% subsidy. So, I mean, the fact that, I want gas, don't misquote me here. I want Alaska gas to get to Alaskans and the rest of the world as bad as anybody else. But there's this thing called the economics of it, the fiscal reality of what is it going to cost. And if you have to put an 80% subsidy to deliver gas at, 15 to 20% over what market value is, who's going to buy? That's the big problem. And you had to pay an 80% subsidy. That's the problem.
Yeah. I mean, the gas pipeline does solve some issues. It would bring Alaska gas down to South Central. It would bring Alaska gas to Fairbanks, although Fairbanks is otherwise getting Alaska gas because of the LNG contract with Hillcorp. But it would have delivery. But anybody who thinks this is going to be a moneymaker for the state really needs to look at the fundamental economics. It really needs to understand what's driving those fundamental economics. There are rationalizations, justifications, explanations for the pipeline that go on and on and on. But do not do it. Do not think that it's going to produce big revenues for the state. At one time, there was an expectation that it would produce revenues. I remember when Scott Goldsmith used to do his sustainable budgets back in the early 2010s. A significant portion of the out years of the future revenue was coming from the state revenue was coming from the pipeline. But I think that assumed a gas cost, a gas price at the wellhead of somewhere in the neighborhood of $12, and now we're down to $1. And at $1, that just doesn't produce a whole lot of revenue. So we have to be realistic about this. I appreciate Seth. I appreciate the op-ed. I appreciate the effort the effort at salesmanship, but don't predicate it on state revenues. Don't predicate your pitch on the benefit to state revenues.
Okay, I want to sidebar for just a minute on this because I've had these conversations over the last 5 or 6 weeks with various Alaskans just out in the wild, right? Talking to people. And there's been a lot of chatter about the Alaska gas line, the AKLNG, and the president and his actions and what it's going to mean. And the problem is that I think it's doing more harm than good because it's putting this idea in people's minds that, oh, this is right around the corner. It's going to be there. We're going to be saved. And then when I start asking questions about things like, well, but did you know that the economics is this? And did you know that, the Wood-Mackenzie report and the problem? And they're like, oh, no, we had no idea. So it's a dangerous thing to pump everybody up. Like this is going to be the thing that's going to save us. And it's right around the corner. And, Glenn Farn is in there and all. But the thing is that what you've got to get companies to invest in it. And they're not going to invest unless they make money. And that's the problem, is that there is no money to be had in the construction and operation, maybe in the hiring, and there's an economic boon there. But other than that, you're not going to get people to pony up the money up front.
Yeah, no, I mean, every day there's an announcement, or every week there's an announcement of a new contract or a new project for U.S. LNG, but it's all based on the Gulf Coast production. It's all based on Gulf Coast LNG plants. And now it seems like there are a number of announcements with respect to Canadian LNG, but it's Canadian LNG. So it's not, Alaska is not in the conversation. I mean, we talk about Korea or Japan. Well, Korea's political environment is all screwed up. Japan's political environment with the recent election they had over there is all screwed up. And no one is in a position in either one of those countries, political position, either one of those countries, to make a long-term commitment that doesn't look economic, which AKLNG does not from an investment standpoint or from a purchase standpoint, because you got to have a price that's economic, and AKLNG comes in at a price that is at the very margin, very far end of what's out there available in the world today from existing LNG projects. So there's an opportunity cost, another opportunity cost. There's an opportunity cost that we're incurring by all of this buildup about AKLNG. People, are focusing on that, like Seth. People are focusing on that instead of the real problems and the real solutions that we have to undertake. I mean, we're sort of, getting ourselves into this space where we say, oh, everything's going to be solved. We don't have to worry about it. We don't have to worry about our problems because everything's going to be solved. Well, we do, because this isn't a solution. And we need to be focusing on the real world problems that we have, like we talked about in the first segment, which is additional oil expenditures are going to come back to bite us in terms of decreased production taxes. We need to be talking about that stuff. And we're not, because we're deluding ourselves. Seth being an example, we're deluding ourselves in the meantime by saying, oh, AKLNG is going to solve all those problems. It's not. So you really have to, for those of us who live inside a spreadsheet, you really have to bear down and look at what is really causing the problem and what the real world solutions are to the problem, as opposed to spending time talking about stuff like this.
One of my suppositions is that this is all kind of a deadly game of kick the can. They don't want to look at the ultimate problem, which is the size and scope and the cost of government. and the fact that they're not willing to address the issue that we're spending too much, and that they're not willing to look at other alternative revenues, even if they don't want to cut, but there's no other discussion of any other revenues. This is kind of that deadly game of kick the can. They're just doing, it's another way to basically obfuscate and say, look at this hand over here, look at this hand over here, and then that'll collapse, and then people will be like, well, what happened? Because nobody's taking that deeper dive.
Yeah, I think that's a great point, Michael, and a point, frankly, that I ought to be working into some of the stuff I write. That we're doing not only are we not doing ourselves a positive service by focusing on AKLNG because it's going to go nowhere, we're doing ourselves a negative service because we're taking our eyes off of the real problems we face and off of the real solutions that we have to pursue to solve those real problems.
Okay, we're on our way to number 3 of the weekly top 3. Brad Keithley, Alaskans for Sustainable Budgets. Why you got to be such a downer, Brad? It's just, but that's the thing, that we just keep getting fed bread and circuses. That's what I hate. That's what I hate about this whole discussion of AKLNG, is that it's just kind of a distraction from the major problem, which is we are spending too much in this state. That's as much as we'd like it, if we had that money freed up, we wouldn't be so stressed about AKLNG and other things. All right, we got more coming up. Hour 1 continues. Number 3, dead ahead. Common sense, liberty-based, free thinking radio, The Michael Duke Show.
Listened to by more staffers in Juneau than any other show. Because their bosses told them to. And after what they just heard, oh man, they're going to be pissed.
You're a bad, bad man.
The Michael Duke Show.
Okay, we're in the break, ready to go. So, Brad, not so that they could say that we're just, again, such downers and negative Nellies or whatever that they want to say out there. But I mean, so what's the solution to the gas pipeline? I mean, if you were emperor for a day, let's give some solutions, right? Instead of just bitching about things, let's give some solutions. So, what would be the solution? If you were king for a day, emperor of the world, and you could make this happen, what is it going to take to get a gas line here, or how would you fix this problem?
Well, basically the fix of the gas pipeline is the greater fool theory. Can you find somebody with a bunch of money that's willing to pay for the cost of the pipeline, invest in the pipeline, and essentially subsidize it by accepting below market returns in its operation, and in fact, not only subsidize it by accepting below market returns, but subsidize it also by committing to purchase a huge amount of volumes from the pipeline in order to keep the volumes flowing, keep the whatever revenues there are flowing, even if world prices for other opportunities are lower, nevertheless commit to purchasing volumes from the pipeline. And that's, I hate to say this, but it's the truth. I mean, basically the entire Trump approach has been the greater fool theory. Are Taiwan, Japan, Korea, Thailand, are they all willing to be the greater fool by investing in this thing and making purchase commitments of this thing, sort of regardless of how it stacks up in the world market? And interestingly enough, he hasn't found the greater fool. We haven't found the greater fool out there willing to do it. Glenfarne, I mean, people say, oh, well, Glenfarne's on board. That must mean something. What Glenfarne's doing is investing very little, sort of on a bet. And the bet is they get 75% of the equity for a very small investment, 75%. And the bet is that we find the greater fool, and they're able to turn this thing into a real thing. But if the bet turns out not to come true, they haven't invested that much money in it. They've invested some time, some resources, some money in it in terms of going to FID and that sort of stuff. but they haven't invested that much. And it's just sort of a bet that maybe this thing will pay off. And that's what you find in the private equity world. You find people who have enough money that they sort of bet on these marginal projects. If one of them hits, great, I make even more money. If it doesn't pay off, it's a tax write-off. And that's really what's going on here. So if I was the king of the world, I guess I would try to find the greater fool and convince them this thing is a good thing and they ought to invest in it. The thing that Senator Sullivan's been talking about, the U.S. government, so it's a national defense issue. We need to have gas for these military installations in Alaska, and so it's really a national defense issue. And so we ought to get the Department of Defense, the Pentagon, to invest in it. It's another form of the greater fool theory. I mean, yes,
except we're the greater fool because we're the taxpayers paying for it, is what you're saying.
Yeah, but that's what it is. I mean, it is. I've seen this in the business world throughout my entire career, and sometimes you find the greater fool, and they invest in it. And so all of a sudden, your bet paid off. But that's what we're dealing with here. Some suggest that we wait on. I think Harold suggests this on occasion that we look at setting up an LNG plant on the North Slope, and that we tanker it out. That we have ice breaking tankers, much like what Russia has done with.
Right.
A couple of its projects.
I've talked about that several times.
But we don't get gas for Alaskans that way. And there's issues up there. I mean, I was part of a couple of project teams during my career that looked at that, I was on the legal side of it, but there were people who were looking at that prospect, and there are issues about, do you have a channel to get the tankers out? How long do you have to build the jetty out to get to deep enough water to fill the tankers up? What do you do about ice? All sorts of issues about that add to costs and make the economics of that alternative challenged in a different way, but nonetheless challenged. Maybe find a greater fool that will go for that. But that's the problem. This is an economically challenged project. In a world where there weren't LNG alternatives, where there weren't gas alternatives, it'd be a great project. Back in the 1960s or late 1960s and the 70s, well, back in the 70s and the 80s, 70s and 80s, it was a great project to get gas to the lower 48 because we thought the lower 48 in the world was running out of gas. And so Alaska was a source of gas. And so we built this big pipeline from Alaska down to the lower 48. And all of a sudden the lower 48 would be saved. Well, that worked in a world in which we didn't have gas.
Hold on, Brad. Hold on. Here we go. We're getting back into it. Hold on.
The Michael Duke Show. Seriously humorous with a pinch of intellect. Sorry. That is humorous. Here's Michael Dukes.
That guy is so mean sometimes. I mean, I don't know why. Why? I paid him to say that. I don't know why he's so mean. Brad Keithley, Alaskans for Sustainable Budgets, the weekly top 3. I'm a glutton for punishment. What more could you say? Brad, we know that the K-12 debate is not over. I mean, even though the governor's veto is a single-year veto, and they're going to start getting that $700 a kid next year, they're only getting $500 this year, but next year they're getting $700. But we know it's not. We know that's not the end. They've already said that. They've already come out and said the quiet part out loud. It's got to be $1,800, right? I mean, it's just it's coming. But now it's getting even more complicated because there's more involved in this. This whole thing is going to get more complex. Give it to us.
Yeah. So this to some degree, the one big beautiful bill is similar to what Nancy Pelosi once described one of the congressional acts when she was speaker, which is you have to pass it to know what's in it, and there are a lot of layers, as it's turning out, to the one in 800 pages. You would expect that, I guess, but there's a lot of layers to the One Big Beautiful Act that are sort of coming to light. One of them that I really hadn't focused on because I was focused on the top line of what it added to the deficit, but one of them, as you start peeling off the layers and you start understanding what's inside the Big Beautiful Act, is a provision with respect to federal taxes that creates an incentive for people to give money to what are these things called? SG something.
SGOs.
Okay, SGO, whatever an SGO is. To give money to these organizations, give money to these organizations that would then support private schools or support additional expenditures for public schools. What the bill does, what the One Big Beautiful Bill does, is create a tax credit, not a tax deduction, but a tax credit for contributions of up to $1,700, I think it is, to these SGOs that will then that are like charitable organizations that will collect the money and then give scholarships to either support private schools, give scholarships to students that will then that are going to private schools, or scholarships that then students can use for scholarship granting organization. That's what it is, SGO. That will then give these scholarships that then can support a number of activities. The tax credit, it sort of turns your federal tax payment into a pick, click, and give. Because if you owe, say, $10,000 in federal taxes, you can contribute $1,700 of that, get a 1-for-1 credit. You can contribute $1,700 of that $10,000 that you owe for federal income taxes to one of these, to an SGO, and get a 1-for-1 credit. So you no longer owe $10,000 to the federal government. You owe $8,300 because you've used $1,700 of it to contribute to the SGO.
Right.
I think that's going to have a huge impact on the K through 12 debate, and a huge impact on funding issues, because all of a sudden you're going to have these SGOs, these non-governmental entities, these private entities, that are going to end up with a lot of money that are coming via these tax credits. And why not? Because if the choice is either paying $1,700 to the federal government in terms of taxes, or paying $1,700 to support education through an SGO, I mean, you're going to pay the $1,700 to the SGO. And all of a sudden, you're going to end up with these organizations, these private organizations, scholarship granting organizations, that are going to have tremendous power and significant resources in terms of what's going on with spending for education. And so I think that's just gonna layer in another level of complexity in the K through 12 debate. I mean, I can see, in a subsequent legislative session, somebody saying, well, we need to increase appropriations to K through 12 because they need more money. Well, the response to that by some in those subsequent legislatures is going to be, no, just have them go to the SGO and have them sell themselves to the SGO. And if they can't get the money out of the SGO, that's their problem. Because the money's sitting out there in the SGO, and they ought to, if they have a good program, they ought to be able to sell that to the SGO, and they ought to be able to get funding out of the SGO for it. They don't need more money from the state. And I think that, that really potentially increases the complexity. I did a quick calculation. This is wrong for a number of reasons. It's on the high end for a number of reasons. But if every tax-paying household in Alaska contributed $1,700, did pick, click, and give essentially with their federal taxes to an SGO, $1,700 to the SGO instead of paying it to the federal government, you could raise $500 million. You could raise $500 million that way in Alaska. Won't happen. You'll never get to that number because not everybody will participate. All sorts of things will get in the way. But even at half that, even at $250 million, that's still a significant amount of money that then those in the legislature can say, well, if you got a good project, take it to the SGO. And don't come calling on us. So I think this bill, and I think this provision, is going to complicate the K through 12 debates even more then they're already complicated at the state level as it is. One final thing, the SGO, the applicability of this provision in any given state, according to the bill, is up to the governor. That is, it's an opt-in or opt-out or opt-in, sort of like Obama, sort of like the Medicaid expansion deal was. That is, that the state could opt into Medicaid expansion, but it didn't have to. But if it didn't, it didn't get the additional federal dollars. The ability to use this at a state level is going to be an opt-in procedure up to the governor. Now, Dunleavy certainly is going to opt in. I can't
Right.
imagine why you wouldn't. But throughout the U.S., there's going to be this really odd debate about whether the governors ought to opt into the SGO option.
Right. Well, the red state governors will more than likely immediately jump on board, but the blue state governors are going to have a hard time because the education industry, the unions, and everything else are going to be fighting back against this because they don't want the competition. They don't want to have to compete for those dollars. They just want them to be plonked in their account and shut up and sit down and give us the money. And so it's going to create some interesting situations. But like you said, if I'm a taxpayer and I've got a tax bill and this essentially costs me nothing because I'm going to owe it one way or the other, hell yes, I'll write a check to an SGO versus writing it to Uncle Sugar for that kind of stuff, because that makes sense. I mean, why wouldn't you at that point? And so it's going to create it's going to create a whole new ball of wax.
You're essentially viewed one way, you're essentially delegating the appropriation of education dollars now to these new entities, SGOs. I mean, SGOs may become the most powerful thing, ever in some states.
Yeah,
because you're essentially going to delegate. I mean, if the legislature says, "Don't come to us, go to the SGO," if you want additional funding, the SGO is now a private entity is now going to become tremendously powerful in terms of how it doles out these dollars.
Brad Keithley, Alaskans for Sustainable Budgets. The weekly top 3 draws to a close. Whew, man, it's a lot of truth right there laid out by Brad. I hope you got it. If not, go back and listen to the podcast, which will be available later this morning, wherever you find great podcasts, and you could share it with your friends. Brad, thank you so much for coming on board. As always, it's good to talk with you.
Michael, as always, thanks for having me.
We got hour 2 dead ahead. The Michael Duke Show, common sense, liberty-based, free thinking radio. Yeah, SGOs. That's the law enacted earlier this month would soon allow taxpayers to redirect a portion of their tax bill to nonprofit scholarship granting organizations, or SGOs. The taxpayer could write a check up to $1,700 to an SGO, but get that full amount back via a reduction of the same amount of their income taxes instead of a regular tax deduction for the donation. It's a donation that ultimately doesn't cost the donor anything. And so why wouldn't you at that point do that? Donna Ardwin's in the chat room. She said Florida and several other states have had those tax credits for decades at the state level. I'm assuming at the state level. And she said Alaska could run its own program with corporate income taxes if it wanted to.
Talk about revenue issues. I mean, talk about budget issues. Wait, this is, I mean, if you did it at Alaska state level with corporate income taxes, you just be chewing up the tax base. You just be, narrowing the tax base down further. So let's not go down that road. But at the federal level, I mean, it opens a door. If you think about this, Michael, and I talked to one of my friends up in DC about this, and his concern was not only the SGOs, not only this provision. He said, but the next time somebody has an idea about, well, we need to privately fund this or that or the other thing, let's just do another pick, click, and give, or another SGO with respect to that thing. And pretty soon you're chewing up the federal tax base by doling it out to all these private organizations that essentially are subcontracting to run various aspects of the of federal programs, because they're federally funded in the sense that they're allowing you to take a portion of your income tax that otherwise would go to the federal government. They're allowing you to take that and put it over in this private entity. And so these entities are going to be essentially federally funded, but they're not going to be subject to federal rules or federal constraints.
Well, it injects another level of politicization into the process, I think, in some regards, because the SGOs will then be, and they could be. I was just thinking, man, maybe I should start an SGO and just start, applying for this and then put those money. I mean, because then I could point the money at the institutions that I believe will do the best job. So it will inject a level of politicization that may not have been or is not there right now. But it does decentralize the power from the state, which I'm in favor of. I'm in favor of decentralizing the power from the state because their whole focus has been to kowtow to the educational industry at this point. And so we need something that does. Maybe this breaks it out. It makes it more complicated, but maybe it breaks it out. And gives us a little bit there.
It makes it hugely more complicated. And yes, you ought to start an SGO, but you've got to convince people to give money to your SGO as opposed to the SGO that the guy 3 blocks down the street started, as opposed to the guy 3 more blocks down the street started. So it's going to be sort of the Wild West for a while as people figure out how to establish the SGOs, how to attract, how to market them in a way that attracts money to them. You're going to spend a bunch of money on advertising. A bunch of the money you're going to get is going to be on advertising. It's going to be a mess. But from a state legislator standpoint, which is sort of the position I tried to put myself in as I was reading this, it's a great out. I mean, you want more money from me? I don't have it, but go to the SGO. Go convince the SGOs that you are entitled to the money, and they'll give you the money, or they'll give scholarships to the students that go to your institution. Is basically what it is, and go from there. It's just going to add another level of complexity to the whole K through 12 debate, and I would be a little surprised, I guess, to see it show up in the session that's coming up, that's starting the week after next or whenever it is. Right. But it's not too early for it to start showing up in that session.
Brad Keithley, less than 2 minutes here. Final thoughts for today.
Final thoughts is we've got budgetary issues that just keep getting worse and worse and worse. Yes, we're getting people to explore on the North Slope. Yes, we're getting new investment on the North Slope, but it's not going to translate into revenue in the near term. And in fact, it's going to translate into reduced revenue in the near term. And the Alaska gas pipeline isn't going to solve it. So let's not go down that road too long. Not divert our attention too long on that. SGOs might be part of the solution. And they're going to be worth more discussion and more thought as we go forward.
All right, Brad Keithley, Alaskans for Sustainable Budgets, and the weekly top 3. What's the music like this week, Brad? What are we doing?
I'm staying home this week. I'm not going to a concert. Great concert last week. If there are any Glenn Hansard fans out there, it was a great concert, and they're putting on he and Marquetta are putting on a great show. So if you get a chance to see it, go see it.
All right. Brad, Kevin just said, final thoughts. Do we encourage the greater fool or scare them away? That's the question there. I don't know, man. I mean, I would love to see Alaskan gas. I just think that would be fantastic, but it's just not going to happen until somebody out there is making money, making it happen. Nobody's going to do it as a charity. Which is unfortunate. I mean, in some ways, but in the other ways, definitely good. All right, Brad Keithley, thank you, my friend. Appreciate you coming on board.
Michael, as always, thanks for having me.
Appreciate you being on the show today. All right, that brings us to hour 2. We got Chris Story coming up, and we'll be diving in with him. Let's get to it. Here we go. The Michael Duke Show, common sense, liberty-based, free thinking radio.
Buddy, put that thing back in its holster. We haven't gone anywhere.
I don't understand.
Check out the MichaelDukesShow.com for information on how to get access to the podcast.
Welcome to the party, pal.
The Michael Dukes Show.
The greed and the entitlement is astounding to me.
What more could you want from a low-budget radio program?
This is a dumpster fire.
That was just BS.
It is time to get a new perspective.
We know just what you need, and we've got just the cure. Open wide and prepare for a steaming hot cup of freedom.
I just don't fathom it.
The Michael Dukes Show, streaming live across the world.
Oh, baby, live around the world on the interwebs at michaeldukeshow.com and across the state of Alaska on this, your favorite radio station and or FM translator. Hello, my friends. Welcome back to hour 2 of the big radio show. We have got more discussions, commentary, and thoughtful talk here this morning as we continue discussing things that are going on in the state of Alaska. We just finished up with Brad Keithley, Alaskans for Sustainable Budgets. If you missed that, you can go back and catch it on the podcast, which is available on Spotify or wherever you get your podcasts. You can go back and listen to it at any time and do it, or you can watch it. If you want to see Brad's charts and everything else, you can watch it on the replay on YouTube or Facebook or Rumble, again, or wherever you watch your videos at on the interwebs. So go out there and check it out and see what we've got going on. All right, coming up this hour, we're going to be talking with Chris Story, who's going to give us a little bit of soothing positivity here at the end of the show. He may come on a little bit earlier and talk with us a little bit about fair tax, but we're not 100% sure on that yet. In the meanwhile, we're going to continue to lay things out for this week. We've got I've been hyping this because we've got a good show lineup for this week. Tomorrow, I think we're going to be talking with David. Oh man, is it one of those days? Yeah, we're going to be talking with David, our education analyst. He writes for Must Read Alaska, and he is going to David Boyle, and he's going to come on and talk with us about his latest article in the Must Read Alaska, talking about what are we actually getting for the money that we're spending in the public schools. And is it the education cartel? Are they basically, monopolizing this, and what are we actually getting from it? And there's some interesting numbers here, especially from a lot of those people who are pushing for simply just more money. Some of the most vocal people who said, we don't need policy changes, we just need more money. So hoping to hear from David Boyle tomorrow morning, followed shortly thereafter by Allison Gaylord, who's going to come in and talk with us about the Peony Festival that's going on here in Homer. It is the annual worldwide Peony Festival going on in Homer, which is the city of peonies. I think we've got more peony farms per capita than any place else in the world right here, and they are beautiful. My wife has had a couple of vases of peonies in the house here for the last week or two, and they're just gorgeous. But we're going to talk about that and what they've got going on. Then on Thursday, David Ignell, who has written a couple interesting articles for Must Read, talking about some of the things that are going on, including grand jury stuff, which we discussed a little bit yesterday with Ben Carpenter. But we're going to be talking with David Ignell about the situation in Southeast, where the Ketchikan police chief was actually ousted. The attorney general had some. It's an interesting story. You should go read it on Must Read. here before Thursday's show, because David Ignall is going to be on with us in the second hour to discuss that. And I think it's going to raise some questions. I think it's going to raise some questions on what's going on. And then finally on Friday, Professor David Yamane is going to be joining us, and we're going to be talking about his book called Gun Curious. And he is a professor who found himself interestingly enough in the gun culture, and we'll talk with him about that on Friday in the 6 o'clock hour on Friday. So got a pretty nice week shaping up for guests and discussions, and we're going to be looking forward to that as we go forward. All right. We're going to continue on here and start dissecting some of the things that we were just talking about. I want to kind of go back for just a second in one of the things that we were talking about with Brad, and that is in regards to the AKLNG. Now, I want to preface everything that I'm about to say with this. I am a fan of AKLNG. I have been back in the day, pre-Walker, before Bill Walker became governor. I worked with him and several other individuals up in the interior, trying to find a way to bring gas to market. And one of the problems that we always seem to run into, and what I've kind of consigned myself to, is the fact that until this project is economically viable for investors, we're going to have a very, very hard time for this to ever come to fruition. In fact, I think it was Anthony who made a comment in the chat room, which I'm going to scroll back here and see if I can find real quick, because I thought it was hysterical. He said, "Let's make a wager." He said, I bet I'm buying a micro thorium salt reactor for my private property before the state finally finds a way to get a gas pipeline installed. And that might actually be true. I mean, that might actually be part of the problem. So again, to preface everything with saying, I would really like to see Alaskans being able to use their own gas. I think it would solve a lot of issues in the state. If we had access to the trillions of cubic feet of gas on the North Slope. I mean, with a T, trillions of cubic feet of gas on the North Slope. But the problem is this is what I see with this whole discussion that's going on right now. As I told Brad, I have had conversations with private citizens over the last few weeks. Ever since, Glenn Farn took over and the governor, hyped this whole thing up, and then the executive orders from the president, and then all this discussion. We saw this Seth Church opinion piece, and it's one of many opinion pieces talking about how somehow, some way that an Alaska gas pipeline would solve all of our problems and all of our woes. And to me, the thing that upsets me about this whole thing is not that we're having the discussions per se, it's that the discussion is being dangled out there like it's some kind of carrot that this is what's going to save us. That somehow this is the answer and we're working on it now and we'll have it soon. Right? That's kind of the way that they put this all together, right? Oh, this is it. We're working on it. We're going to have it soon. It'll be fine. And then everything will be solved. It's kind of similar to what Brad was talking about with some of this extra drill, baby drill, and the oil exploration and everything else, where we see more production, and yet the truth is we'll actually see less revenue from more production because of the way that our tax structure is, our oil tax structure, which I have advocated that it needs to be changed. The oil tax. Let me take a stand here, put my foot down, to the chagrin of many of my Republican friends who will say, we have to change the oil tax structure because we keep swinging in this pendulum back and forth between the PILT and the ACEs and the what was the one before that? Every time it swings back in one direction. It's too hard on the oil companies. Oh no, it's too hard on the state. Oh, it's too hard on the oil companies. Oh, it's too hard on the state. And we keep trying to find this happy medium. And unfortunately, we are, we keep swinging back to where it's really good for one, but not good for the other. And this is the case in point here, talking about what Brad was just talking about, where we basically punish old oil and exempt new oil from a lot of these things, or we allow them to write off all this investment costs up front, and we put off Alaska's reward and Alaska's payout to way down the road. So, I mean, I just take a stand on that first and say we need to readdress the issue of oil taxation. Now, that in and of itself creates a whole nother set of problems, which is if we give more money to government, they'll just spend it, right? So we've got to have a balance. We've got to find a way. We do need to restructure the oil taxes, but at the same time, we need to be fighting for a constitutional spending limit on what's happening on top of that. Okay, I'm sorry. I got away from myself there. Let me go back to what I was talking about, which is the AKLNG. Here's the thing. This is the biggest game of bread and circuses that I think I've seen maybe in my lifetime in Alaska. Okay? It is a distraction. I'm gonna wager that nothing is going to come from this. That there's going to be a lot of talk. There's going to be money expended. There's going to be a lot of hopes pinned to this idea that if we could just get AKLNG, it would solve all our problems, and we'll get it. It'll be fine. It's going to happen. Don't worry. It'll be good. That's the next. I am saying this is the biggest distraction, I think, of my lifetime in the state of Alaska, where they're like, look at this shiny object, look at this shiny, and then, oh, sorry, didn't work out. It's like they're continuing to obfuscate the true problem. And the true problem is that we in the state are spending way too much money on government. Donna Ardwin, who's in the chat room, if you're a fan of the show, you know who Donna is. She had said the government is spending 2 to 3 times what it should right now. And that's shocking to a lot. Oh, how could it, just think of all the, no, we're spending 2 to 3 times what we should be spending. That is the main problem. And this is just a distraction. That's all this is. This is a shiny object. Look at me. Pay no attention to the man behind the curtain. And a lot of people, as I said, the last 5 or 6 weeks, I've talked to a lot of just people on the street, talking about things and people who know me, people who don't know me. We get into a conversation about AKLNG and they're all excited until I start, hitting them with some facts about the economics of it and everything else. I mean, all you have to do again is look at the Wood Mackenzie report, which in its best case scenario includes an 80% subsidy for the project. This is their they're laying the scenario, which scenario works best. That the project receives an 80% subsidy and delivers gas to market at like $3 over what true market value is. Like where you could buy, I could buy it somewhere else for $10. I could buy it from Alaska for 13. What am I going to do? With an 80% subsidy based on what, a $60 billion cost? This is the problem. As we continue to have this held up as, look, it's going to happen because Glenn Farn and all this and the president, and it's so irritating to watch because I know that we're just basically setting ourselves up for inevitable disappointment, all the while obfuscating the actual problem, which is the size and scope of government in the state of Alaska. Now, I mean, I know that probably every one of the listeners out there right now feel the way that I do about Alaska gas. They want to see Alaska gas in market. We want to burn our own gas, right? We don't want to have to import it. Although, again, I've been arguing that imports are the only way to go right now because there's no way we're going to be able to get our gas off the slope. That the cheapest, most economical, what we should be planning for is imports now while we try and figure out the rest of it. But I think almost every Alaskan, when asked, would say, yes, we'd love to burn Alaska gas. And they're tapping into that. That's the worst part. They're tapping into that desire. The desire, I mean, I've had that. Again, I've been working on this whole thing for 20, 25 years, working with people, talking about it. How do we get more people involved? How do we get this gas from the North Slope? How do we burn Alaska? How do we, all that. But again, it keeps running up against that whole thing, which is, how does it get paid for? The greater fool theory. Who funds it? And when the Wood Mackenzie report says 80% subsidies and it still delivers gas at higher than market value, how is that going to work? Now, we here in the state may pay for it at higher than market value because, let's face it, we're used to paying higher than market value for most things. But these lines depend on volume, and that means that export is a huge component of it. And so if we're not exporting the gas in their scenario, we're not exporting the gas at volume, that means the cost goes up even more. And so my fear here is that at the end of the day, we're just setting ourselves up for disappointment. And all we've done is delayed the inevitable acknowledgement of the truth, which is we spend too much in the state of Alaska on government. That's the pain here. That's the pain. That is what we're dealing with right there. My buddy John with the Alaska Study Industry says the study industry stands ready to be able to study the myriad issues of economic benefits of having a gas line. Yes, of course you do, John. Of course. But only if we can split that. All right. Only if we can split that. All right. We've got more coming up. Let's continue. I haven't heard back from Chris yet. So we will continue our discussions here in just a moment. The Michael Duke Show. Common sense, liberty-based, free-thinking radio. We will return with more right after this.
It's the Michael Dukes Show.
Why not take a cruise?
We're broadcasting live through a series of tubes.
Allowing all of these entities to provide streaming stuff going on the internet.
Well, it's kind of hard to explain. Sorry. Streaming live every weekday morning on Facebook Live and MichaelDukesShow.com.
Okay. In the commercial break right here, I see David has confirmed that he is going to be on the program tomorrow morning at 6:05. So it'll be good to talk with you tomorrow morning. David, thank you. So thanks for coming in. Study the study that we studied before from the year before that. Ronald says, it was nice to meet you last Wednesday. Nice Wednesday. Twice. Yeah, last Wednesday he caught me out at Home Depot. I was at the Home Depot doing a little shopping. Do a little shopping. Let's see. Scrolling backwards here. The only gas that Alaskans can get comes out of Juneau. I felt somewhat cheated that we didn't. Wait a second. Anthony says, I feel somewhat cheated that we didn't get the Darth Vader modulated voice saying more. How's that? Was that acceptable? Was that the good one there? Anyway, Anthony wanted the more. Good. Rick just said, we just need the auto pen. We can fix it all. Oof. I've been catching some of the blowback on the auto pen situation, these hearings. Have you seen that? What is it now? The third or fourth Biden aide who's done nothing but take the fifth for every question that's been brought forward on whether or not the president was cognizant enough to be able to even lead the country. You've been watching that? Anthony said, man, I feel better, question mark, now that he got the more out of the, now that he got the, now that he got that out of the way. It's okay. Don't worry, Anthony. We'll get it. It's all good. It's all good. I'm going to scroll. I'm still scrolling backwards. Just did some quick reading on those. Let's see. That's it. I guess I'm all caught up on all the comments. Although Brian did lay this article down, which was something about LNG tankers, and I can't click the. Oh, here it is. Hanwha's Ocean U.S. shipping affiliate has announced plans to reflag Korean-built liquefied natural gas vessels to the U.S. flag. I'd love to see it because, again, we haven't built a single LNG tanker in this country in 40 years, 50 years, 60 years, something like that. In fact, I think the last U.S. flag LNG tanker was built in the late 60s, if I'm not mistaken. And it's going to be interesting to see. But that's the big challenge that Brad was talking about. One of the biggest challenges with trying to export gas off the North Slope was the fact that we can't use our own gas if that's the case. That's the problem. We can't, because we couldn't ship it. We couldn't ship it from the North Slope to Nikiski because it's port to port inside the U.S. and we don't have any U.S. flagged LNG tankers to be able to do it. So one of those things. All right. Does anyone believe any important people will be indicted, convicted in the Russia collusion hoax? No, I don't. No. I think most people have given up on that. I think most people, again, more distractions, more bread and circuses for us to see and not pay attention to. Okay. Let's get to it here. Let me send Chris another nudge. Ask him what he's doing. All right. Let's get to it.
The Michael Duke Show. Not your daddy. Wait, sorry. Not your daddy? Ooh, not your daddy's talk radio. Huh. Whew. I was scared for a second. Thought we were going down. Here's Michael Dukes and the show.
Okay, and we are back. Chris Story is going to be joining us shortly here for our weekly positivity segment. Yeah, that'll be fun stuff. I know we've been banging the drum on the education issue pretty hard over the last year. And that is in part because, I mean, this is where the battle is going to be fought over the next year or two in the legislature. We just saw round one go to the education industry. Round one, this last session, went to the education industry. They got a huge chunk of what they wanted with very little ground being given, very little concessions being offered. And we know that it's going to continue because they've already said it's going to continue. They've already said this was a nice start, but now we're going to get more. Then we had that letter from the Anchorage superintendent where he basically says he's declaring war on a war of resistance against budget cuts. This letter that went on to say that they were going to have to lay off more people, real losses, that they're going to cut, dozens and dozens and dozens of more teachers and all this kind of stuff. And it turns out but the one thing he doesn't do is he really doesn't answer as to how, okay, you keep talking. And again, notice how words matter, right? Notice how the verbiage of these kind of conversations matter. And they keep talking about these positions. And one of the quotes in his original piece was, "These are real people. These are not abstract policy outcomes. These are real people. These are real losses." That's, when we start talking about eliminating positions. But how many real people? Again, in the furtherance of this, and we talked about this after that, when the superintendent put this letter out, and then later on, I can't remember if it was the finance director or the school board president came in and said, well, we've cut a bunch of positions, but it's actually, it's not the full-time positions, right? It's not the full-time positions. We actually moved some people around and we did some other things. And, only 15 full-time positions will actually, people will actually be cut. And we don't know how many of those may be retiring and not just being refilled and everything else. So again, it's kind of this whole bob and weave and deceptiveness of saying we're going to cut positions, but we're not actually cutting people out of the equation. He weaved and dodged on the actual layoffs. He issued a second high drama letter to families and staff this last Friday, continuing to sound alarm bells over budget cuts, but again, offered little accountability for his own role in spreading initial misinformation about the scope of the crisis. In the new letter, according to Suzanne Downing over a must read, Bryant accuses others of false claims and deliberate disinformation, while failing to acknowledge that his first letter earlier this week contained inflated figures and exaggerated impacts. The first communication painted a bleak picture that suggested the district was facing a $98 million deficit, which was an inflated numbers, including federal funds that were never intended for reoccurring expenses. This is, again, that COVID money issue that continues to come back and bite him in the ass. I mean, this is it right here. Nowhere in his latest missive does Bryant disclose how many layoffs the district was actually able to avoid after reassessing its finances. Instead, he vaguely credits the use of vacant positions and limited alternative funds to reduce layoff, while insisting that the cuts will lead to real and lasting impacts on programs ranging from after-school activities to literacy support. Again, dancing around the issue. These kind of letters and the spoon-fed pablum that you're hearing from the education industry at every level right now, and Bryant is just the latest and the most visible of these issues, is you're hearing the same thing, which is stories that are meant to gen up fear in the public, to get their attention, to get their blood boiling, and get them to storm the gates useful cannon fodder in the fight for education spend. They want the parents up there in arms to be able to be out front and be their stalwarts, to be their stalking horses, as we've talked about in the past on this kind of issue. This is, again, part of the problem. And we've seen this all year long. We go back to one of the initial outcries back in, gosh, it must have been January or February, when the school district was going on and on about how they were going to have to cut 400 positions and this and that. And then again, in the fine print later on, or in follow-up questions, they admitted, well, almost 300 of those were vacant positions that were not being filled because of attrition. They weren't rehiring. People were retiring, all this kind of stuff. And so the true number was maybe 100, which, again, still detrimental to those 100 people who are losing their jobs. But again, just shows the manipulation that these organizations are using to try and get the public upset about this and get them on their side and get them to go out and fight for them. And that's the problem. Again, people aren't taking the time to dig deeper on these issues. People aren't taking we are a very trusting a group of folks overall. Oh, well, if they tell us that, we must believe it. If the newspaper says it, it must absolutely be true. I mean, our elected officials, our school board, they wouldn't lie to us. They're telling us the real deal, right? They wouldn't lie. But again, you're being used. You're being used, and you're getting all spun up intentionally so they can release you on the elected officials and on the hordes and get what they want, which in the end is something very selfish. This one article, and I'm going to go back to the previous article where we were talking about this letter that came out. They go on, they do all this. The children are an afterthought. Nowhere in this article does it talk anywhere about the scholastic achievement of the children. And in fact, the only time the children are mentioned is in regards to all these layoffs. He detailed how ASD has already eliminated 42 central office positions, covering 30 million in salaries and services, drawing down reserves below policy minimums, increasing class size. Even these measures were insufficient to absorb the latest wave of cuts. These are not abstract policy outcomes. These are real people. These are real losses. And here's where he mentions the students. And students will feel the difference when they walk into school in August. They'll feel the difference. But what about the outcomes? What about the graduation rates? What about the achievement, the Alaska Star, the Reads Act, the LEAP, right? The educational. I mean, where's all these? Where is the actual numbers on how the students are doing? We don't talk about that. We just don't know. They're going to talk in broad generalities, and they're going to try and make you feel bad for all the people that are there. And then what was the thing that the teaching professionals, that 30 of the positions were teaching professionals that helped teachers to teach something, and now they're being moved from an administrative position down into the classroom, which is where they belong. Anyway, it's this is going to be the biggest issue this year, and you're going to be sick and tired as much as I'm sick and tired of it. You're going to be sick and tired of talking about public education by the middle of by the time we hit election cycle next year. You'll be tired of talking about education. But that's where we're at. That's what's going to be. That is going to be the soup du jour. That's what we're going to be talking about all of this next year. All right, we got more coming up. We'll be back with more of the Michael Duke Show. Common sense, liberty-based, free-thinking radio. We'll be back right after this.
is that?
Common sense. Regularly heard on American radio. Michael Duke Show. Radio.
Okay. We're going to continue on here in just a second. Waiting for we're gonna come into this. Maybe offer solutions at some point. I've offered solutions. You don't like them. I'm going through here. Generating fear. That has worked every time. Still, nobody recognizes the tactic. I mean, it's being used all the time by all different kinds of politicians of every stripe, Republicans and Democrats. It's crazy. Barbara says she has a meet and greet tomorrow night at the old Battery Bob's on Romans Way in Fairbanks, right off South Cushman. Brad is in one room, I am in the other. Okay. All right, Barbara. I put it out there. Hopefully more folks show up. Yeah. Let's see here. David Boyle. Okay. All right. I'm all caught up, I think. He's waiting for Kevin Spacey. Is that what it is? We're waiting for Kevin Spacey. Chris Story, the man from Homer, joins us this morning. Are you there, my friend?
Good morning. Kevin Spacey's a great actor. I wish he'd have just been normal, don't you? Great actor.
Yeah. Well, it's always never meet your heroes, right? That's the never meet your heroes.
Did you ever see Glenn Ross?
Yeah, long time ago.
He was the real estate office manager in that. Played a great character. You love to hate him, that kind of character.
He's what inspired you to go into real estate. Is that what you're saying?
No, that would have been Al Pacino's character, or Alec Baldwin's character in that movie, maybe.
All right. You ready to go here this morning?
Sure. I apologize for stepping away from my phone long enough to miss two of your texts, but yeah, let's do Fair Tax Act. That's exactly what I was hoping to talk about. So you read my mind. I just wasn't here for early. I apologize.
Well, but I need the positivity. Do you have a positivity segment, or should we come back? I mean, I can have you back on Thursday. We could talk about the fair tax on Thursday if you want.
Okay. Cool. Right on. We'll do that.
Let's do it. Let me see. Wait a second. Don't mind me, folks. I'm just booking guests here on the show. 6:05 on Thursday.
Right.
6:05. Good.
It sounds good. Done.
All right.
Book it, Dano.
I'm booking it, Dano. All right. So what's our positivity segment for today look like?
Well, what I was thinking we talk about is the expert of you.
The expert of you or the expert view?
You, Y-O-U.
Of you. Okay. All right. Got it. The expert of me, which is easy because I love talk. It's my favorite subject. All right. I'll be, hey, by the way, are you sending me your Dear Reader thing? Because I'd really like to send you the rest of that stuff back.
Thank you. Yes. I appreciate the reminder. I just need to get into my home, quote unquote, home studio so I can do a clean copy because remember the other one is a little echoey or whatever. So yeah, I need to re-record that.
I just want to make sure. I want to fold it all in here and give them all to you at once. So I'm just waiting for you. So I just didn't want you to think I'd forgotten about you. All right.
And that's
Chris
right.
Story,
you asked me to pick that thing up at the store. Yeah, I'll get that too.
Hover, the man from Hover, which is one town over from Homer. All right. Barbara says, instead of creating schools that a government wants to fund, how about creating schools that parent wants to send their children to attend? Wow. I mean, that's a unique perspective. Absolutely. Harold keeps, why do I engage with Harold? You keep blaming the I'm not blaming any teachers. Where have I ever said it was the teacher's problem? See, that's the thing. You have some great points occasionally, and then you completely run off the reservation and are just like, you're blaming the teacher. Such nonsense. I am not blaming a single teacher. I have not said this is an administrative problem. Now, if the administration has teachers in it, then I guess by association, I guess you could argue that I'm blaming those teachers. I'm not blaming the teachers in the classroom. I'm blaming the administrative process and the superintendent and the school boards, and that's who I'm blaming for the problem, you know. And then Bill said, the consummate workaholic. There you go. You'll email me today. I'm sorry I missed you too. And by the way, who takes lunch at 3:00 in the afternoon? I'm just asking for a friend. 3:30. Who takes lunch at 3:30 in the afternoon? Anyway. Sorry, I'm giving Bill a hard time here. I'm giving Bill a hard time. All right, we are about 20 seconds out, ready to get into this. Chris Story is our guest, and we're going to get started. Let's get ready to rock and roll. Common sense, liberty-based, free-thinking radio, the Michael Duke Show. Let's do it right now. No, right now.
The Michael Duke Show, proudly splitting the left versus right dichotomy. Yeah, I had to look that word up too. I don't think it means what he thinks it means. Here he is, though. That guy, Michael Dukes, the one with the show.
Yeah, that's me, the one with the show. I'm just going to get a t-shirt that says that. Yep, the one with the show. The Michael Duke Show continues. Chris Story joins us. The Kevin Spacey of Alaska, somebody just said. Although I was thinking more the Tony Robbins of Alaska, but you know, whatever floats your, whichever one gets you going in the morning. Chris Story joins us to talk about positivity, pottery, and more. Let's get into it. Hello, Mr. Story.
I guess I misunderstood when you said something about Kevin Spacey. You're suggesting that somebody compared me to him? Who on earth said that? And have they checked their medication drawer lately?
I think it's just because of your headshot that we use on the show. I mean, I don't think you look like Kevin
right.
Spacey. You know, I mean,
Thank
that's just
you.
me, steely-eyed man of whatever. Anyway, let's get into it. We need a dose of positive here today, Chris, after we just got the hell kicked out of us by Brad Keithley with some hard truth bombs out there. And we're going to talk about me today, which is my favorite topic, right? We're going to talk about me.
That's right. We're going to be at home with narcissism with Michael Dukes.
Exactly, which is all I care about because it's all about me. We're going to talk about success and positivity and more. Chris, take it away today. Your topic today is
the expertise of you. And I ran across a great quote from Oscar Wilde, and it sums up so much of, I think, what is wrong with and right with, say, government, for example. And the quote is this: an expert is an ordinary man away from his home giving advice. And doesn't that just hit home? Like an expert, we think about expertise as having, something like you need to have gone and acquired it elsewhere and then come to me from on high and deliver this expertise.
Right.
And I'm not talking about building a bridge or doing open heart surgery. There's obvious expertises that you absolutely need. But in general, here's my assumption and my assertion today is that you are an expert in far more than you give yourself credit for. I think and I'm talking about the royal you, Michael, not just you, but you as well, in that as much that you are somebody that can solve some of the world's problems right where you are with what you've got. We needn't wait for somebody coming in on a white horse, barebacked and bare-chested with a sword to save us. We have the power within our own hands, within our own minds, and the confines of our communities to solve so many of these problems that we'll abdicate to, say, Juneau, or your city hall, or your municipal center, and your assembly, or Washington, D.C., because, well, they must know. I was once thinking, and I've told you this before, I was once thinking about, I think I'll run for Don Young's seat. Let me give him a challenge here. And several people very close to me lovingly said, whoa, hold on. You don't have a college degree. And I said, oh, I'm sorry. Is that a prerequisite to knowing, what is right from wrong and understanding your ability to communicate and defend and represent your constituents? Absolutely not. And so I just suggest that you, whether or not you would give yourself the credit, you are an expert in many, many things, and we needn't wait for that ordinary man or woman from out of town with a briefcase to come in and give you advice and solve your problems.
That's what I love. When you said that earlier quote, I was thinking, yeah, the out of town guy with the briefcase, right? Because that's what, the guy who swings into town with the briefcase, he's obviously the expert. And
Yes.
it reminds me of the old phrase that, familiarity breeds contempt, because, it's like trying to give advice to your mom or dad later on in life. I mean, you could be like a multi-million-dollar financial planner and you're trying to offer advice to your mom and dad on their retirement, and you just get no traction. Why? Because they changed your diapers, right? They know you. They don't, it's hard to show that expertise out in those regards because they just can't picture you that way. But you need to picture yourself that way. You have some kind of expertise in something. How do you use it? How do you leverage that?
And what I agree, and what do they call that, pampered butt syndrome or whatever? But yeah, I agree with you that is tough, and we have that almost the curse of knowledge, like too much, you can't disassociate from it. I think we also have that curse of familiarity, or hey, I've known you since you were in high school, or you and I went to high school together. We can't run this community. We need somebody to come from on high. I was so proud to have been on the recent hiring committee here in Homer for our current city manager. And I asked the mayor and former mayor, Ken Kastner, and he appointed me because I didn't beg for the position, but I really wanted it. And I'll tell you why, Michael. I knew we'd be inundated, flooded with applications for the job from out of town people. And there was over 35 applicants. I believe 2 were here in Homer. One of them was the current city clerk who had been at the city for over 20 years. And I'm like, she deserves the job. And we in this community deserve somebody with local knowledge and historical perspective and a good person like Melissa Jacobson. She needs to get this job. And I'm telling you, it's so easy to assume the guy or gal from out of town, they're going to come in away from home, and they're going to really show us the ropes and figure out how to do community, how to do government here. And I've been on committees where we've hired people for other positions from out of town, and I've made that mistake where you just assume if they're coming from, Harvard or Yale or San Francisco, they really know how we can run our little community. Nope, it's you. And the same with your finances. You mentioned financial advice. It's the same with your health. You need doctors with expertise, but you are your own expert. You must be your own advocate and use your voice in everything from healthcare to wealth care to anything you want to do or have or relationships in your life. Trust the expertise of you, not an arrogance living in your own blind spot, but I mean to say, trust your intuition, your instincts, and really hone that. That's an expertise you have to hone because we so often ignore it. You're told to quiet down, or maybe you're reluctant to raise your hand in class and be wrong, and then we carry that into the rest of life where, well, we'll wait for the government. I recently discovered a loophole in the sign ordinance here in Homer, and I've been accidentally, inadvertently breaking the law for 3 years in a row. And it wasn't until 2 government uniformed officials from the planning department came to my door and got hostile with me that I realized, wait a minute, this is against the what? What do you mean this is against the law? Give me a break. We'll change the law. Went to the planning commission, and the planning commission, except for one individual on it, ignored me completely and just said, well, we'll wait for the professionals to rewrite the code. Well, the professionals were spending $650,000 from Anchorage to come down and rewrite our code. I'm like, no, 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 no. We are our own experts. We are the people that know best in our own community. And it's the same in your life. You mentioned finances. Are you waiting for somebody from, one of these organizations who has a product that they're pushing out to sell you? Or do you know your own finances in your own future better than anybody? You better be self-educated when it comes to your health, your wealth, prosperity, relationships. Trust yourself.
Well, and we've been conditioned we've been conditioned to believe this in so many ways. I mean, I don't necessarily want to get too political, but I mean, in the same ways, you couldn't possibly teach your own children. You're not educated enough. You need a professional teacher who's gone through all the steps and done all that stuff. You couldn't possibly you couldn't possibly spend your own money. These governmental people, these elected officials, they're much better than you. We understand much better than you how to spend. We've been conditioned to believe that in so many ways. We stopped trusting our own instinct.
Yes, exactly. You said it right there. Trusting your instinct. And sometimes we're wrong, and sometimes we're sincere and wrong, and then you're sincerely wrong. And that's okay. But then you have to then learn and move forward and lean into the next decision, into the next problem, and you grow. And I think if you look backward, everything you've done up to this point in time was on purpose and for purpose and with a purpose, whether it worked or not, because it's building on the power of who you are. And you can tap into it at any time if you trust yourself. You'll see some of these young influencers, and I'm using air quotes, influencers on whatever the social media du jour is, and go, wow, where does the confidence come for you at 25 to lecture people, and sometimes millions of people will follow them on business, which they barely scratch the surface of? What gives them the right? Well, it's called confidence. And confidence is the essence of con artist. And sometimes we follow confident people to the end and then leap over, just like the lemming. You have to be careful. Have confidence in your own ability to distinguish between what is right for you and what is wrong for you, what is working and what is not working, and know the difference.
That's the genesis, right? Con man is confidence man. That's what it is. That's a confidence man. That's where the term con man came from. So because they obviously believe, they make you believe in them and have confidence in them. Anyway, less than 60 seconds here, Chris. Final thoughts for being your own expert in all things.
I think it comes down to one word: trust. You're going to trust somebody. I say trust you, and be open to learning and keep an open mind, but trust yourself and trust your instincts and honor them.
Well, I love it. Chris Story, the man from Homer, he is the in-town guy with a briefcase. He's the expert on positivity. That's what it's all about. One of many. Chris, hold the line for just a second. Folks, we're out of time for today. Tomorrow, David Boyle and Allison Gaylord from the Alaska Peony Co-op. We'll see you then. Be kind, love one another, live well. I just wanted to hear this story, Chris. The loophole in the what, you had a sign or something and they're like, you can't do that, and we're gonna whack your hand because you didn't do it. What's the I gotta hear this story now.
You've seen it. You've driven by it 12.5 times. It's called a feather sign because it's in the shape of a feather. It's a little temporary.
Right.
You put a pole in the ground and you put this feather sign up. And in this particular sign says Story Real Estate. And it's just a way of kind of catching your eye as you're driving by at 55 miles an hour. You catch your eye and go, oh, the real estate office there. Okay. And you see them out front of restaurants. You see them out in front of all kinds of little shops. And they are legal all around the country in places like Martha's Vineyard and San Diego and these other kind of coastal communities that we sort of hold up on a pedestal and go, wow, that's a really neat spot. Places in Coos Bay, Oregon, all kinds of cool little destination places. These are totally legal. For some reason, a number of years ago, the home city code changed to outlaw them. I was unaware of this. We've had one up for 3 years. And then these two guys in uniform from the city come to our door. And I come out of my office one day, and Ian, one of my associates, was out there talking. And this guy that he was talking to was worked up. He was sweating and angry and red-faced. And I was like, whoa, wait a minute. What's going on here? And that's when I learned what was going on. And then, I just said, this is ridiculous. You're telling me you have nothing better to do than come to my office and hassle me about this sign, which looks fantastic, by the way, is blocking zero ingress or egress or visibility. What are you doing here? Go do something productive. And that didn't go well. And I was like, I'm going to change the law. So I wrote an amendment to the law, which was really cohesive and in keeping with our little coastal community. And so I wrote an amendment to that sign code and sent this letter to the Planning Commission. And at the time, I had two friends on the Planning Commission. Now there's just one. The mayor's unappointed one, appointing somebody else, and I don't know who it is. But my one friend said, "Oh, that sounds really reasonable, Chris. Yeah, thanks." And then I never heard anything from anybody else for weeks. And I went back to my friend and I said, "Hey, whatever happened with that amendment I was suggesting?" He goes, "Well, it got put on the agenda, and then the commission decided to table any talk of that until Agnew Beck, the firm we've hired out of Anchorage, comes down to help us rewrite our code." I'm like, "What? We don't need Agnew Beck. $650,000 contract to come down and rewrite the code. We can do it ourselves. What are we doing this for? Why are we abdicating our responsibility for our own community of 5,000 people that we can do our own sign code? We can do our own zoning code. We can have these conversations and figure it out. We don't need this out of town person with a briefcase to come in." And I'd been on the committee back in 2004 or 5, I forget. Same firm, Agnew Beck, hired back then for $250,000, which frosted me. But of course, with inflation, now we spend $650,000. And we spent $250,000 to have them come down and rewrite our comprehensive plan. And this guy comes in, I'm telling you, I know what good clothing costs. This guy was dressed in the finest clothing. He had these tasseled shoes, brush polished. I mean, this guy, he's the epitome of an ordinary person away from home dispensing advice. He was Oscar Wilde's poster child for that comment or that quote. And anyway, so these kinds of things just frost me. I'm like, I trust us. I trust Melissa Jacobson to run this community and be our city manager. I trust local people. We know better than somebody coming here from out of the area to show us what the latest and greatest. That's how you end up with, these green policies that just don't make any sense. But this is what was happening at the, say Agenda 21 and, all this kind of stuff gets foisted on small communities because you just don't trust yourself. And I say it's not just in government affairs, but that's what led to this thought was this interaction I had. And then the fact that this good idea, which I was willing to discuss and amend, but it's still a good idea, lays dormant on the floor until the expert gets here. And then they'll tell us what to do with the sign ordinance. They'll tell us how to create zoning code that's good for our community. I'm like, no. We're surrounded. We have a gobsmackingly smart community. We have got an incredible talent pool here. And so do you in Soldotna and Kishki and Kenai and Fairbanks. Wherever somebody's listening right now, you know best. You know better than somebody coming from out of town with a briefcase to tell you how to do it.
What was this? What's the end of that? Is it still, you're still waiting? Is that the thing? You're still waiting?
I'm flagrantly in violation of the law, hoping and praying to God that they're penalizing me and I don't know it, and they're going to present me with this is before you got here, Michael, but there was a guy called Mike Kennedy, great guy, great Alaskan, he's just a wonderful person, and he had racked up $1.8 million in zoning code violations here in Homer. And I dubbed him the $1.8 million man. And we went out on a public offensive and said, this is not going to stand, not in my community. You will not charge him $1.8 million in zoning fines. I draw a hard red line, just like Saddam Hussein. I'm going to draw another line if I have to, but I'm drawing a line in the sand. And I'll be damned if that's going to happen on my watch. And we put enough public pressure on then city manager, who was an out-of-town expert with a briefcase, who decided to come down and show us how to eat the cabbage. And we put enough pressure on him that he called Mike, took him to lunch at Subway and said, look, can we just settle this? And he said, well, I'm not paying $1.8 million. He goes, how about 200? Okay. And that was it. That was the end of it. So it's this kind of idiocy that, I am hoping and praying that they're tallying up a bunch of fines against me and everybody else flying these flags right now.
Yeah, because I'll be honest, I saw the flag, but it didn't catch my attention. It didn't obscure my view of anything or anything else. I mean, it's just it's insane the amount of nanny stating that we're seeing in this small little community. Why do we need outside people to come in and tell us how to live? We can figure it out for ourselves.
And I told those two gentlemen, and probably very nice guys in their own respect. I'm not castigating the two employees that came over, but obviously we have too many people in the planning department. If you've got nothing else to do, I think we're overstaffed.
Yeah.
Because I think our community will go on without you just fine if this is all you've got to do today. We're probably overstaffed.
Yeah.
And it takes $11 million in sales, by the way. You have to sell, you have to garner tax from $11.2 million in retail sale to garner $650,000 in the city's apportionment of that sales tax. So think about that. Almost $12 million has to be spent locally to accrue enough sales tax dollars to then ship in a pipeline, like a pneumatic tube, just all the way up to Anchorage and to the firm of Agnew Beck, where they'll spend it in Anchorage. And guess what Anchorage has? No sales tax. They'll spend it up there. They're living large on our backs because we can't do our own comp planning. Come on.
Yeah. No,
I find happening. We're not the only ones. That's happening everywhere.
No. And I find that so offensive that, we have to bring somebody else in because obviously we can't figure it out for ourselves, which is just, it's insane. It's insane. All right. Well, sorry, Chris, to hold you.
I'd rather have Harold come and do it.
Yeah, well, he probably charged less. I mean, maybe charged. Well, no, he might charge the same. I don't know. All right, Chris Story, thank you so much, my friend, for coming on board. And Thursday morning, 6:05 a.m., you and me for the full hour. Man,
okay,
that sounds
like
fun. All right, thanks, Chris. We'll talk to you later.
Thank you, Michael. Bye.
All right, folks, that's it for today. Tomorrow is another one. The Michael Duke Show, common sense, liberty-based, free-thinking radio. I hope you have a good sunny day. It's beautiful out there. We will see you then, okay? Have a good one.
We've shed our terrestrial radio skin, and now we are slimy lizard internet people. It's the Michael Duke Show.